Hello everyone, today is the 28th of April 2026 and today I am going to talk about whether the OpenAI chicken is finally coming to roost. And this is a moment I expected for a very long time. For those who have been following me for years know how much I wrote about it and how much I questioned the revenue figures, the cash figures of OpenAI, and all the various circular financing slash revenues round tripping scheme that has been going on for years and that inflated the whole AI bubble to the stratosphere. Something I warned about as well, once again, in the latest weekly podcast just a few days ago, and I was frankly very surprised to see the Wall Street Journal using the exact same quote that I used during that video. Before we begin, don't forget to like the video, subscribe to my channel, and turn on the notifications if you don't want to miss any of my future updates. Let's dive in. Today, I was working on something and planned to talk about something completely different. But then the Wall Street Journal dropped this bombshell. OpenAI misses key revenue user targets in high-stakes sprint towards IPO. I'm pretty sure nobody expected to read something like this today, especially ahead of hyperscalers' earnings due in a few days. I'd love to see the faces of Jensen Huang and wannabe Jensens while reading this specific sentence from the Wall Street Journal article. Companies, CFO, and board have questioned the wisdom of massive data center spending in the face of slowing growth. Any market reaction so far? Guess what? Zero. This is the perfect example of what I warned about last week in why you cannot short this market even with the Middle East on fire. Traders and investors simply don't care about fundamentals whatsoever anymore. As long as stocks keep going up, everything is awesome, and nothing can change that until something eventually hits the brick wall in the real world. Did OpenAI just hit a brick wall? No, not yet, but it surely is getting dangerously close to that. It should not come as a surprise that its biggest sponsor, Microsoft, has been working to distance itself more and more from OpenAI sinking ship. Microsoft's decision to cut OpenAI revenue share in a fresh step to loosen their AI alliance is not bullish at all for either of the two companies. Surely Microsoft is going to suffer a great loss when OpenAI ultimately implodes. But guess what? Investors are so bullish and deaf to any warning sign that even if Microsoft shares open on Monday down 5%, the dip was both hard. The price ended up closing the day flat. This is what I said back in October. The data centers frenzy will be remembered as the largest waste of capital in history. Logically speaking, now that it is no longer speculation that OpenAI is struggling to grow revenues, that it will be nearly impossible to raise more capital with a valuation already above $800 billion, and the real cash is going to get from its latest jumbo $120 billion round is eventually going to be just a fraction of the total commitment, especially when SoftBank is struggling to close its $40 billion bridge loan to fund the latest commitment. And here is a great catch from Ed Zitron, to the point it had to attempt to raise $10 billion by pledging the very same OpenAI shares as collateral. You might expect all those companies, from hyperscalers to Oracle and neoclouds, that bet hard on building infrastructure to accommodate OpenAI's project demand, will suffer. Nope, not at all. All these players have already been busy recycling their contracts to other players like Anthropic and Meta, which still won't be able to pay for that compute with the revenues from their AI business. But until this becomes factual news on outlets like the Wall Street Journal, nobody will surely care. Just take a look at this. Anthropic says Google to pump $40 billion into the AI startup. Anthropic and Amazon tighten bond in a $5 billion investment and computing deal. CoreWeave announces a multi-year agreement with Anthropic. Anthropic looks to hire six-figure role for negotiating data center deals to fuel Europe AI expansion. Microsoft to integrate Anthropic's Mythos into its security development program. Anthropic plans $50 billion US data center spend, starting with Fluidstack sites in Texas and New York. Meta commits to spending additional $21 billion in CoreWeave as AI cost keeps rising. The move is pretty obvious here. All these players are rushing to Anthropic for one simple reason: to avoid write-offs on their infrastructure spending in the event they cannot bill customers' revenues, even if those revenues, more often than not, are just credit spend and not really paid in cash, as I explained a long time ago in The Smoking Gun that proves how OpenAI is Microsoft's revenues laundromat. Everyone knows how little I believe in coincidences, and another huge coincidence just happened in the past 24 hours. Intel Chief Accounting Officer just resigned. NVIDIA Chief Accounting Officer just resigned too. What's going on here? To be honest, I couldn't resist fetching a very old event from 24 years ago that is so damn similar. As the Enron inquiry intensifies, mid-level players face the spotlight. The point is not that OpenAI is about to become Enron tomorrow. The point is that every bubble ends the same way. First, the story breaks. Then the numbers miss. Then the accounting people start quietly leaving the room. And only then does the market admit that demand was overstated and capital was misallocated. If the Wall Street Journal report is even half right, we are past the quote-unquote price discovery phase and deep into the quote-unquote narrative maintenance phase. Infrastructure has been built. Contracts are being recycled. Valuations are being defended. And everyone is hoping the next quarter buys them one more quarter of time. That works until it doesn't. When the marginal buyer finally asks a simple question: who is actually paying cash for all this compute infrastructure? The entire chain of assumptions snaps at once. And at that point, it won't matter how bullish the tape was the day the warning signs appeared. It will only matter that they were there in plain sight. Thanks a lot for listening to my new podcast again today, for supporting me on X, on Instagram, and for reading my research on JustDario.com. I wish everyone a nice day.